Welcome everybody, and thank you for joining us for our Down Payment Program Basics webinar. This is always one of our most popular webinars, and today we're going to talk about the most common kinds of homebuyer assistance programs, what's unique and interesting and beneficial about them, what's different among them, and we're going to talk a little bit about how Down Payment Resource can help you connect more and new buyers to these programs, and ideas for marketing and promotion and positioning yourself as a unique and central resource for new buyers. So, my name is Sean Moss with Down Payment Resource. We'll talk about the availability of programs around the country in markets big and small, healthy or distressed, east, west, urban, rural. And we'll also look again at these three most common types of homebuyer programs and how you guys can educate your clients and new prospects about the programs for down payment help or closing costs or tax credits that are available in your market. So, without further ado, like I said, we're going to go fast. We've got a lot to show you, and we do want to try and leave some time at the end for questions. But as we go, we've also got Tracy Shell with us. She's our VP of Marketing and Communications. If you get our Down Payment Lowdown newsletter, she is the curator of that newsletter. She's in the background, and she's going to be answering some questions as we go, and we'll answer some of those at the end as well. So keep this interactive. Put your questions. Use the chat box to put your questions in there, and Tracy will be monitoring in the background, and we'll get to all of them later. All right. Now, let's get started. We've got a lot to show you. First thing I want to talk about is our Homeownership Program Index. This is a snapshot of all of the homebuyer programs across the country, and we do this quarterly. And we look at not just how many programs are there, but we really try to break that down and understand the mix of opportunity available nationwide. We look at how many programs are funded. At last count, we were approaching 2,400 total programs nationwide, and 87% of those were active, funded, available, and ready for buyers walking in the door. 36% of those did not have a first-time homebuyer requirement. One of the common misperceptions about these programs for down payment and closing cost help and tax credits and so forth is that they're only for first-time homebuyers, and that's not the case. 14% of these programs were for targeted audiences: veterans, police officers, firefighters, nurses, educators, teachers, and so forth. All right, so we do this so that we can keep a running tally and get a snapshot in time of the homeownership program possibilities that are out there that we're tracking, that we're trying to help you guys uncover and help new buyers uncover, because we want everybody to understand the full spectrum of opportunity. So we'll have our third quarter index coming out shortly. Look out for that. That will give you an update on what's going on, but there are tons of opportunities out there, and we're capturing all of the information about these and updating them monthly. Now, in that index, we are capturing information from over 1,200 different and unique housing finance agencies and local housing authorities and community development departments, nonprofits, and so forth. We already said 87% of those 2,400 programs around the country are active. They have dollars available today, and we track that monthly as well. Funding status, tax credits, mortgage credit certificates, they're on the rise. They're increasingly popular. We're seeing states across the country spin up a new mortgage credit certificate that didn't previously have one or hadn't had one in a while. We're even seeing tax credits at the local level in cities and counties in some bigger markets, and that's really the true sign that mortgage credit certificates are on the rise. They're a great benefit for buyers. They're becoming more popular. And then, of course, we talked about some of the targeted audiences for whom there are sometimes, or often even, additional or unique programs that are not necessarily available to the general public. And that represents a good chunk of the programs in Down Payment Resource. So that's the index, and that's really to give you some perspective on the vast array of opportunities available across the country. And we're going to start talking now about what those programs look like. So across the country, in markets big and small, you know, we said we're looking nationwide, right? But anywhere we look, there are homebuyer programs from the state level down to the city and county level, from nonprofits, from city or county municipal governments, and employers, and more. And one of the other things that we do is often we integrate with the MLS, and we look at how many properties or how many listings qualify for home buyer programs based on where they are and the price, so location and list price. Now, across MLSs, somewhere between 70 and 80% on average of listings are eligible. Across the country, almost 90% of properties are eligible for, now that's not just listed properties, right, but of single-family properties in general, almost 90% are eligible for one or more home buyer programs. And we teamed up with RealtyTrack to really kind of take a dive into this a couple of times this year. And one of those outcomes was property eligibility is higher than most people thought, actually higher than we thought going into that study. And then the media, the industry, a lot of people are really starting to look at down payment as the obstacle. It's always been the obstacle, but they're starting to write about it, talk about it, look for solutions to overcome that obstacle. And they're coming to us to ask questions about down payment programs. Where are they? What's out there? How many programs are really out there? And what's astonishing about this is every time we talk to somebody about down payment programs in the news or in the industry or elsewhere, even real estate, financial leadership, they're always surprised to hear how many programs are actually available in their market or in their company's footprint. So there's a ton of opportunity out there, and we want to break down how buyers can get into these homes and how you can help them do that with a basic understanding of the most common types of programs out there. And to lead into that, how many more home buyers could purchase if they were aware of these programs? We looked at some information from the Harvard Joint Center for Housing Studies recently, and they did a study in about the 80 largest MSAs around the country and found that on average, 50% of millennial renters were eligible to purchase a home. And they looked pretty deep. They looked at income, they looked at credit, they looked at debt load, they looked at student loans and so forth, and said of millennial, so 25 to 34-year-old renter households, how many could purchase, assuming they were creditworthy and had a down payment, right? And in many markets, that number is higher than even the nationwide average of 50%. Here's Atlanta, that's where we're based. 63% of millennial renter households could qualify to purchase a home, but the study doesn't cover the down payment. So the presumption there is they may need down payment help. They didn't look at assets in this study. All right, so how many more renters in your market could buy if they were aware of these programs? And how simple is it for you to make more and new buyers aware of all of these programs? Let's get into that. Let's understand all of the options that are out there for your prospects, your clients, as they're looking at renewing a lease versus home ownership. Can you position yourself in their web searches? Can you get your marketing in front of them? Can you get that question answered? How do I finance a property? How do I become a homeowner? So they don't renew their lease and they do explore home ownership. So the most common types of home buyer programs that are out there that you guys can start promoting to new buyers and you guys can start educating prospective buyers with are, first and foremost, the down payment program or down payment assistance. It's called any number of things, but it's basically those programs that offer at closing down payment and sometimes closing cost help. So that's the most common, by far, the most common type of home buyer program in our system, ranging from 2/3 to 3/4 of all of those 2,400 programs in down payment resource that we're tracking across the country. Most of them, the vast majority, are down payment and closing cost programs. Now, the other two kind of tied for most common programs are affordable first mortgages. Those are almost always from a state housing finance agency. So if you're in Illinois, that's IDA. If you're in California, that's CalHFA. If you're in Texas, that's going to be TDHCA or TSHAC. If you're in Georgia, the Georgia Dream program, right? And then the last category, which is pretty different, but this is the one we mentioned is on the rise, mortgage credit certificates. Those are tax credits, and they are becoming increasingly popular in states and even local markets around the country. And that's actually not at closing help. That's a tax credit year over year for the life of the loan. We're going to get into all these, starting with down payment programs, the most basic, the most common, the most popular, the most prevalent. So let's talk about that, the down payment program. Certainly no two programs are the same. All of these programs have all kinds of nuances and differences, but we're going to start with what's the same. What do they share in common? So the down payment program, it's the most common type of home buyer help that's out there. These are typically funded by a state housing finance agency or a local city or county government, most often through a number of HUD funds, basically, HOME, NSP, CDBG, and so forth. And then there are also other programs that are administered by nonprofits like NeighborWorks or Neighborhood Housing Services and other nonprofits around the country whose focus is on housing. A lot of them provide education and counseling services, and many of them provide down payment programs as well. And then, of course, some of these can be sponsored by employers as a recruiting or a retention effort. And there are others as well, but by and large, they're government or nonprofit funded, and they offer anywhere from a couple to several to, in many markets, tens of thousands of dollars to the individual home buyer for down payment and closing cost help, and we'll look at some of the other uses of these programs. So down payment programs from state or local governments or nonprofits offering several to tens of thousands of dollars. What can those dollars be used for? Well, it depends on the program, right? All of these requirements depend on the specific program and their guidelines and their requirements and their funding source and so forth. But generally, down payment, that's obvious. Closing costs, very common. Prepaids, common enough. Sometimes these dollars can be used for prepaid expenses, eligible closing costs and prepaid expenses. We see a lot of programs that will allow the down payment help to be used for repairs to the property, to bring them to code or to bring them to quote unquote livability standards. And then of course principal reductions prior to closing. Now let's take a poll real quick. I'm going to put this up on the screen and let's get interactive. So let me open this up. Tell us, have you ever used, and actually Tracy, if I can ask you to look at the polls section, I don't have my poll launcher here. Can you take a look real quick and see if you can launch the poll? And guys,
sure. Let me look at that.
Okay.
Let's see. Sean, it's actually saying that there's no polls associated with this particular webinar.
Okay. Well, why don't you guys type in the chat box here? I was going to put a live poll on the screen, and I apologize. Didn't make it to the webinar here. But just tell us, have you ever used a down payment program with a client? And we got a lot of people here, so we're going to flood the chat box, but that's okay. If you've ever used a down payment program, and let's just think this year, have you done a down payment program like from your state housing finance agency or a local nonprofit or platinum or something like that? Have you done one of those programs with a client this year? And just give us a yes or no. And honestly, if you've got a success story, put it in the chat box, because guess who's going to give you free PR out of that and wants to publicize your story? You just heard it, Tracy Shell. She's got a blog, industry contacts. We've got a newsletter. She loves telling personal stories, local stories, success stories. So anyway, put some of that in the chat box and we'll see what we get there. And I apologize for not having the live poll ready. But so let's move on. We're still talking about down payment programs, right? First-time home buyers. We talked about this earlier. I mentioned this earlier. One of the myths out there is that you have to be a first-time home buyer to use these programs. And while that may be the case often enough, and while these programs are certainly very common among first-time home buyers, you do not necessarily have to be a first-time home buyer to take advantage of the down payment programs available in your market. And more as we talk to more MLSs and more associations and more lenders and so forth around the country, and we take a look at what's available in their market, we might find 100 or 200 programs in a given market, depending on what we're looking at. Are we looking at a state, an MSA, a couple of counties? But generally, we see 30, 40, 50% of those programs in a given market do not have a first-time home buyer requirement, meaning that the buyer, even if they've owned in the last 3 years, because remember, that's really how HUD and therefore a lot of these down payment program providers define a first-time buyer, is as someone who has owned in the last 3 years, so or has not owned in the last 3 years, rather, you're a first-time buyer. So if you have owned in the last 3 years, that does not disqualify you as a buyer from all of the programs that are out there. Now, some of them may only be for first-time buyers. Again, true, but don't limit your conversation starter or your talking points about these programs to only those who are first-time buyers, because there are almost always several to plenty of opportunities for people who have owned recently or even currently own. Down payment terms. What does that mean? Repayment terms, right? All of these programs are different. let's start with the grant first. A grant for down payment or closing cost help is a true gift. It is a gift at closing, and that's it. The buyer moves on. It's a gift, right? There is no second lien. There are no repayment terms. It's a gift at closing, down payment on the home, equity, walk away, close, done, right? But there are some down payment programs that have varying repayment terms. Some of those are what's probably the most common here is a forgivable down payment loan. So buyer buys a home, they use the down payment program. It's a forgivable, let's just go with $10,000. Let's say they get $10,000 and it's forgivable. What's actually most common is a 5-year affordability period. So it's forgivable over 5 years in 20% increments each year for the 5 years. And then after the 5th year, it's forgiven. It's effectively a gift after the 5th year. And since most buyers live in a home for at least 5 or more years, it's effectively a gift. Now, that's pretty common. Affordability periods may range from really kind of, we don't see too much less than 5 years, but we see 5, 7, sometimes 10 years, maybe longer. And that basically means most often the payments are deferred. A lot of these are 0% interest, no interest accrues, no payments until some affordability period ends, and then the lien is forgiven, and that becomes equity in the home for the buyer. Now, some down payment programs do require repayment. Some may take second or even third lien position, and now we're kind of hinting at layering programs. We're going to talk about that later. But the point here is the terms vary. Often they are a grant. Often they are forgivable if they're not a grant. Quite commonly, the payments are deferred and they don't bear interest. There is no interest. So all kinds of flexibility here, but wanted to just go over some of the basic terms there. And then what about eligibility, qualifying for these programs? They all have income limits, or most of them have income limits, but those range widely from 80% AMI to some of the newest state housing finance agency programs and NSP programs. A lot of those go up to 140, 160, 180% of AMI. I mean, you're talking close to or into 6 figures in a lot of markets, and not just high cost markets or what we would label as the highest cost markets. So, wherever the market is, whatever the median sales prices and incomes are in that market, those are accounted for. So if you're in a market where $400,000 is the median sales price, well, that's probably also less than the maximum sales prices for the down payment programs in your market, because they're trying to get to the median market, right? First-time buyers, new entrants, entry-level home buyers. And then, of course, property location. That's a factor, namely because the city and the county and the state that property is in also matches up to a set of programs available in that city or in that county or from that state. And then if you get into targeted areas, certain census tracts and zip codes and neighborhoods within a city, there may be additional hyper-local programs that are very strictly let's just say very strictly based on property location. And then, of course, some eligibility is need-based. That could be determined by any number of factors from a program provider. But most commonly, you're going to see income limits and sales price limits with some FICO and LTV requirements. Do they have to be a first-time home buyer or not? And they'll qualify for a down payment program much the same as they will for their first mortgage, because we're not talking about cash buyers here, right? We're talking about people that are already going to pre-qualify for a first mortgage. So open up the door for down payment programs and just duplicate the effort to get the down payment help for your buyer. Homebuyer education. We get questions and comments about homebuyer education all the time. We are proponents because homebuyer education courses prepare buyers for the purchase and ownership experience, and they create successful long-term owners by opening up the conversation and opening their minds to some of the things that they're going to experience as homeowners that they weren't experiencing or didn't have to deal with as renters. This is often required, particularly for first-time home buyers. Increasingly, we are seeing online options from eHome and other online online homebuyer education providers. Used to be, you had to go to an 8-hour HUD certified classroom course on a Saturday, and that's still common enough, but increasingly we're seeing the use and the approval of online homebuyer education, which allows your buyer to move faster, get to the certificate of completion, do this at their leisure, in their home, on their laptop, and so forth. So we're big proponents. Homebuyer education prepares buyers for the experience and also for successful ownership. Now, measuring the opportunity. Let's just think bigger picture here. There's 2,400 programs, roughly 2,400 programs nationwide. There are national options, nationwide programs. There are state programs in every state in the country, including DC, and including Alaska and Idaho and Wyoming. I mean, everywhere, right? Literally everywhere. And then there are tons and tons of local city and county programs all over the country in markets, big, medium, small, and even really small. And by the time you get to really small markets, you're talking you're talking suburban, exurban, and even rural markets where we still see down payment programs. And of course, every state has programs that are typically statewide. So what you're doing is covering even those underserved markets where, there may not be too many down payment options, but even in rural or exurban markets, the state programs still work there. We'll talk more about rural markets as well. Down payment dollars, they vary by program. It could be $5,000, it could be $25,000. It kind of depends on the market. It's not uncommon in Southern California to see a down payment program for $30,000, $35,000, $40,000, $50,000. But that would be particularly odd in a place like Boise, but $10,000 is not uncommon in a smaller market. And that's a lot of money. I mean, you're talking about 5% down on a $200,000 home in what may not be that expensive of a market. So anyway, there are billions of dollars nationwide spread across 2,400 programs around the country, all offering thousands of dollars for down payment, closing costs, and so forth for buyers. Where do they come from? We've kind of hit on all this. And state housing finance agencies, they offer the widest array of opportunities from any one agency in a state, and their programs typically are statewide. So, as lenders typically look to go get approved and participate in programs from a state housing finance agency because they want the most bang for their buck and the broadest reach for their approval and for their efforts. But then you get into cities and counties, community development departments, housing authorities, land trusts, development authorities, and so forth, and they are using state or federal or other funds to spin up down payment programs for people buying in their city or in their county. And then we see programs from employers, nonprofits. We mentioned a few earlier. So all of these are being tracked in Down Payment Resource. All of these are out there and available and ready for you to show buyers, and all of these are going to help more and new buyers into homes. Some AKAs, if you will, for down payment programs. You may hear them referred to in any number of acronyms: deferred loan, silent second, a DPA program. They're all down payment help, right? They're all different, yes, but all these words, all these acronyms, just remember, first and foremost, they mean down payment help. They mean a buyer can come to closing, you can connect them to down payment help, and you can ease the burden and help them overcome the down payment obstacle. That's the biggest obstacle new and younger buyers face, the down payment. So anytime you see any of these acronyms, yes, they're all different. Look at the guidelines for the program to the extent that you want to or feel you need to become an expert. And we don't think you do. We'll talk about that in a few minutes. But they're all down payment help, and that's the most important thing to remember, is down payment help is out there for more buyers. All right, now that was all the first category of most common homebuyer programs. The second one, affordable first mortgages. And I should add before we move on here, if you have questions, if you have comments, use the chat box. I'm sure Tracy's already overwhelmed, but keep them coming, keep them interactive, and what we don't get to today, we'll follow up after the webinar. So next, the second most common program type, and really it's kind of, as far as popularity, on par with mortgage credit certificates, but we're going to talk about first mortgage programs below market rate, or BMR, or affordable first mortgage rate programs, first mortgage programs. These are almost always from a state housing finance agency. The reason we add these to Down Payment Resource, and the reason we talk about them, is because more often than not, these programs are going to subsidize the interest rate depending on how they fund the program and offer a below market interest rate, and then combine that first mortgage through a state housing finance agency with one of their down payment programs. So they get a great first mortgage, plus they get down payment help, and often enough, you can even use another local program or a city or a county down payment program and layer it with this experience. So we talk about these, and we're going to talk about them briefly because they do add to the value and add to the benefit of all the down payment programs we just talked about. So let's dive in real quick. First mortgage, affordable first mortgages, reduced interest rate. That's one of the most common benefits, which effectively expands the first mortgage options for that buyer. And then you can combine those with down payment assistance. So great first mortgage, which gives them reduced buying costs, lower monthly payments, and effectively increased purchasing power, combined with down payment assistance, offers a great opportunity for buyers to explore homeownership and explore financing sooner than they thought maybe they could, or with you because you opened the door when nobody else would. Now, funding, again, usually they're statewide because usually these programs come from a state housing finance agency. New Mexico Mortgage Finance Agency, Florida Housing Finance Corp, Mass Housing. I'm just naming state housing finance agencies around the country as we go, but that's where these typically come from. And because they are statewide, even if you're not in the big metro markets in your state, so let's take, we're from Atlanta, if you were in Macon or Augusta or Columbus, or in Florida, if you were in, Gainesville, which obviously isn't as big as Miami, or Orlando or Tampa. These programs are still available, and even outside those, outside the core service area in those even small and medium markets, these statewide programs offer an opportunity for buyers in suburban and exurban and rural areas to become your clients, get down payment help, and get into homes as well. An example, USDA. Now, we don't add the FHA loan or the VA loan, stuff like that. We don't add all that to down payment resource, but USDA is unique because when you talk about underserved markets with regard to the number of down payment programs and the kinds of down payment programs available, well, in rural markets you typically don't see as many down payment programs as you would in a major metro market. So we like USDA, and we add that to down payment resource in a lot of our tools because it offers 100% LTV, the potential for no monthly MI options to all the buyers out in the rural markets that may not have access to the same number of and the same type of down payment programs. All right, so that was a quick hitting intro to affordable first mortgages, and I believe we're about halfway through, so we're doing good on time. Now, the third most common type of homebuyer program. These are super awesome. They're super popular right now. Rather than going away, we are seeing new mortgage credit certificates at least quarterly from a new state or a new county or a new nonprofit. These are on the rise. They've been around for a long time, but they're on the rise now because they offer an alternative, or even they can be offered in conjunction with down payment help. You'll see a lot of state housing finance agencies who have a mortgage credit certificate for buyers. They will allow that to be used with down payment programs and sometimes with their first mortgage programs. Now, not everybody, right? Sometimes they don't. But where a mortgage credit certificate can be used with a down payment program, now you're talking about an annual life of loan tax credit for up to $2,000. We'll talk about where that number comes from, plus all the down payment help at closing, right? So a mortgage credit certificate, you might hear it as an MCC. That's just mortgage credit certificate, MCC. This is a federal income tax credit. Now, we all know about the mortgage interest deduction, right? That's a tax deduction, which reduces your taxable income. A tax credit is a dollar for dollar credit, cash in pocket, to offset your tax bill. So everybody wants a credit before a deduction, right? Credits are better than deduction. This is an annual benefit. When you get a mortgage credit certificate at closing, that certificate can be used once a year for each federal income tax filing, every year for the life of that loan, as long as you keep that mortgage, and sometimes even through a refinance. Some mortgage credit certificate providers, and I'm just going to go with MCC now, okay? So MCC is mortgage credit certificate. Some MCC providers will even allow the lender to increase the qualifying income by offsetting the mortgage interest, taking that credit and applying it kind of as a benefit back to income, and then use more qualifying income. So getting a little extra house or getting a little bit lower DTI to qualify somebody based on having the mortgage credit certificate every year for the life of that loan. So those are some basic features. Now there's an example on the right. I am not going to talk through that, but feel free to read it if you want a mathematical exercise that will pain you. But suffice it to say, this is a tax credit, not a deduction. You can get it every year. It reduces the tax liability of that buyer every year for the life of that loan. Can increase their qualifying income in some cases, and it's based on annual mortgage interest paid. Now, one nuance here, you might be thinking, okay, well, a $2,000 credit, that may be less than what the deduction would have given me. Well, here's the catch. Typically, you can only take the credit for the first 20 or 30, sometimes 40% of your mortgage interest paid, up to an IRS limit of $2,000 worth of credit per year. Every year, but per year it's $2,000. The rest of the mortgage interest you paid each year is then taken as the standard mortgage deduction. So you don't lose the deduction. You just get to get a credit for the first 20, 30, 40% of the interest that you paid. All right, so eligibility for MCCs, similar, usually almost the same as the down payment programs that would be offered by the same provider. Sometimes the income and sales price limits may be a bit different, but geographic availability, where is that program available? MCCs are basically available across the same footprint as the down payment programs offered by the same program provider. We obviously clarified the $2,000 annual tax credit limit. That's established by the IRS and will not change across states, but it is every year, not total over the MCC's life. They typically will require homebuyer education, although that varies by program provider as well. So effectively, eligibility criteria for MCCs are generally similar to or the same as the down payment programs being offered by the same people that offer an MCC. All right, so those are tax credits, MCCs. They're on the rise. Pay attention, because if there's one in your market, that could be a great way, even if the buyer doesn't need down payment help. If you could get them a tax credit for $2,000 a year, never mind down payment help. Maybe they've got it, right? But what a great benefit to offer to a buyer, and what a great conversation starter. And even if they don't ultimately qualify, what a great conversation starter, and what a great way to position yourself as a knowledgeable, capable resource who knows more than the competition or knows more than the buyer, and can position themselves as a resource, as a groundswell of new and interesting and helpful information. All right, so we have now covered down payment programs, affordable first mortgages, and MCCs, which are the tax credits. Those are the three most common types of homebuyer programs in down payment resource, effectively meaning across the country, because we track everything, right? Now, what I want to talk about are, what are some of the unique features and benefits of just all of these? What do they all mean for the buyer, for you as realtors, for you as lenders? We have realtors and lenders listening in today. Some of them do not have a first-time homebuyer requirement. Now, let's talk about targeted areas. That's where most commonly you'll see that there is no first-time homebuyer requirement. So there are programs available to the general public, and then there are programs at kind of the hyper-local level that are available only in certain targeted census tracts or neighborhoods or zip codes. It depends on the market, maybe a whole city or a whole county. But where you see targeted areas, those areas they're pumping a little bit more money into because they want more buyers to come in and live in that area. With targeted areas, you will basically see no first-time homebuyer requirement, more down payment dollars available to the individual buyer than to the general public buying outside a targeted area. So where you might get $10,000 in general, you might get 15 or 20 if you bought in a targeted area using the same program. Higher income limits, typically an extra 40, 50, 60% AMI. So you're going to see income limits sometimes nearly double what they are for the general public if they buy in a targeted area, and higher sales price limits. Now, these aren't hard and fast rules, but they are by far the overwhelming trend. And then, of course, they're only available in specific locations depending on how that targeted area is defined. So if you work in a metro environment, find out where the targeted areas are from your state housing finance agency. And if you're dealing with buyers there could be even better and even more advantageous benefits and down payment programs available to buyers there. And if you start talking about them, you're talking about big down payment dollars, very flexible income and sales price limits, and a lot more opportunity. Targeted professions. We've hinted at this already. Teachers, police officers, firefighters, nurses, city or municipal employees. There are in many markets around the country unique programs specific to these audiences. In California, for example, there's a teacher program. In San Francisco, there's a firefighter program. And there are police programs, several of those around the country, a number of those. A lot of teacher programs, some police and fire programs, a few programs for nurses. So, ask the question, what do they do? And once you ask that question, police officers, firefighters, ask them if they have a military background, because a lot of them will. And then you're back to no first-time homebuyer requirement. Veterans almost always do not have to be a first-time homebuyer for most of the programs they're going to use. Now, that's not a hard and fast rule again, but it is the overwhelming trend. Imagine combining a down payment program for veterans with a VA loan. Yeah, sure, they don't need a down payment for a VA loan, at least if it's their first go-round. But that doesn't mean that down payment's not going to help them, right? What a great way to get into a home, and what a great way to serve, somebody on active duty or a veteran of the military, to say, hey, you can use your VA loan and we can get you $10,000 in down payment. That might be 5% on a $200,000 starter home. So consider it, right? And ask the question, do you have a military background? Does your co-buyer have a military background? And if so, explore the down payment options available to them, not just as part of the general public, but also because of or due to their military background or service. Another targeted audience, disabled home buyers. You may have heard of the Home of Your Own or HOYO program. There are plenty of those around the country. Often, again, no first-time home buyer requirement here, waived for disabled buyers, just like for veterans and just like in targeted areas. And here, a lot of times the down payment money can be used for accessibility renovations, improvements to the household to make it more livable for the applicant. All right, now some common requirements across all these programs, even higher level. You have to be an owner-occupant buyer. These are for primary residences. These programs are not for investors. They're not to purchase a second home as in a vacation home, right? These programs are for people to buy their primary home and live in it. A lot of these programs will have some minimum buyer investment. It will range widely, but typically it's going to be $500 or $1,000 or 1%. Those are pretty common, right? Now it'll vary, but that's the range typically. Homebuyer education, often required, not always, depends on the program, but increasingly there are online options available. And that eases the process and expedites the process for the buyer. And for you, really, because you're relying on your client to get through that homebuyer education component too, to be more educated and prepared to deal with you, but also to get to their certificate of completion and qualify for the down payment program. And then, of course, we're not talking about cash buyers, right? So we're talking about buyers that are already going to qualify or already going to finance the property and already have to collect pay stubs, W-2s, bank statements, all that stuff to go qualify for a first mortgage. And when they do, talk with your lenders, and lenders who are listening in, talk with your realtors and let them know we're basically going to copy that package and send it off as a down payment program application and double that up with the first mortgage. So you're already going through the effort, make a copy of the documents, apply for the down payment program, and with very little effort, you've introduced the down payment help to a new buyer. Benefits for all these programs. A lot of buyers can buy sooner than they thought. There are still serious and disconcerting misperceptions out there among a lot of especially younger buyers about what kind of down payment they need. A lot of people still think they need 10, 15, 20% to buy a home at all. We know that's not the case. VA, no money down. USDA, no money down, potentially, right? FHA, 3.5%. Fannie, Freddie, call it 95. If they're using an HFA preferred program, 97. It depends, right? But we know you don't need 20% down to buy a home. Yeah, you need that to avoid MI, but there are misperceptions out there. That's the point. But the benefits of these programs are lower monthly payments than perhaps they'd get elsewhere, even with a first mortgage. They can retain some of their personal savings. They can increase their home equity when they get into the home using a down payment program, especially if it's a gift or a forgivable loan. Over time, that becomes free equity in the home. More bidding power. So when you're out there shopping for homes, if they really want a 4-bed, 2-bath, but right now they're kind of stuck in the 3-bed, 2-bath range, could a $10 or $15 or $20,000 down payment program get them over the hump? And if so, talk about it now. Get them pre-qualified now, and then get them out looking at the properties they truly want. And then you've got a buyer who's probably not going to buy otherwise, right? Or is going to buy the wrong house that they didn't actually want. And in the end, long-term success, largely tied to the homebuyer education that these buyers receive. It's not just about preparing them for the transaction, it's about preparing them for long-term successful ownership. And we've seen data proving that homebuyer education has such an impact. We won't get into that today, but those are benefits of all these programs, whether it's a tax credit or a down payment program or otherwise. Now, layering, we hinted at this earlier too. A lot of programs can be combined with each other. State programs can be combined with local programs. Upfront down payment assistance can be combined with a long-term tax credit, and so forth. So think of adding a mortgage credit certificate to any transaction. Is it available? Does your buyer qualify? Doesn't matter if they don't need down payment help. Giving them access to a tax credit every year, what a huge benefit and what a favor you've done for them. I wish I had one because I'd like $2,000 tax credits every year. VA loan plus a down payment program. Why not, right? Yeah, you don't need a down payment for a VA loan in most cases, or in a lot of cases at least, but it doesn't mean you can't, and it doesn't mean that's not a fabulous benefit for you to creatively generate an offer to a military client. Now let's talk about how you guys can become that homeownership hero, how you guys can use down payment programs and down payment resource to start talking about this with new clients, new prospects. Get the word out. Increase your purchase pipeline. Lenders, partner up with your realtor referral partners, your brokers in your referral network, and let them know that you do these programs. Start talking about it. Take them out to lunch. Have the conversation. What's the protocol for a new buyer that wants to use a down payment program? What are the expectations, timeline, impact on contract? That's the kind of stuff that lenders and realtors need to start talking to each other about to open up the floodgates for the purchase pipeline. Help them overcome the down payment hurdle. That's the biggest point here, right? All these programs exist to help the buyer over the down payment hurdle because it is the biggest obstacle they face. Jared and Anna, one of the first case studies we ever got when we launched in Minneapolis with our first MLS customer, they said they didn't know where to start, but their agent did. Their agent used down payment resource to connect them to a program, and these two brand new Minnesota, well, they're not brand new now, I mean, it's been 4 years, but these two Minnesota homeowners were able to get into a home of their dreams because they were matched up with a down payment program that they ultimately used to get into that home, all because their realtor started the conversation with literally a click of a button from a listing these two liked. From the realtor's perspective or the brokerage's perspective, use it as a conversation starter. Matt Barker and Brandon Hedges, they have done webinars with us in the past. They use down payment resource as a starting point for new prospects coming in the door, run them through down payment resource, and find out that not only are they training up agents with first-time home buyers, but they're also starting the conversation about home ownership with these people and getting them involved sooner than the buyer thought they could be because they realize there's down payment help out there. So be creative, position yourself as the expert, and use the tools nobody else is using to carve out that niche for yourself or compete in that niche for yourself. All right, now I was going to offer another poll here. I wanted to find out what's the mix of realtors versus loan officers versus branch managers or MLS executives. Feel free to type some notes into the chat box. Real estate versus finance, and I apologize I don't have the poll here, so I'm just going to skip past that. Turn home searchers into homeowners. How can you do this? Let's look at down payment resource itself and how it works. Let's look at your understanding of down payment programs, and we'll look at down payment resource itself in just a moment. So your understanding of these programs. Do you have to be an expert? No. Here's our simple path, and I'm going to give a shout out to Todd Costigan. He's our VP of Customer Relations, and this is really kind of his template, and I swiped it for this webinar. But this is what we've been sending out to customers, MLSs, real estate, brokerage, lenders, and so forth, people that use down payment resource to offer a very simple guide through down payment programs to new buyers. Understand the basics of a couple programs and then market them. And once you're done, realtors, engage a trusted down payment loan officer, somebody that you know and you trust will do a good job with new clients that you bring them who are using down payment programs. And number 4 really is the outcome. Overcome the down payment hurdle. So let's walk through this real quick. Find 1 or 2 or maybe 3 popular programs. Let's go with 2. Find 2 popular programs. 1 down payment, 1 tax credit, right? Understand how many dollars the buyer can get and understand where it's available. With that, as a realtor, you can start the conversation. You don't have to know FICO, DTI, income limits. It doesn't matter. You're starting the conversation, right? All that stuff is for down the road later, probably with the lender. But understand the basics of a couple of popular programs, where they're available and the dollars involved, so you can put some catchy talking points out there to a buyer. Hey, I know about a $15,000 down payment program. Oh, really? Cool. What's that all about? Anyway, once you've got the basics down, and that's easy, you can do that from Down Payment Resource. But once you've got the basics down, market those programs. Market yourself as having access to these programs, access to lenders who can help you with these programs. Get them to click on Down Payment Resource. If your MLS is a partner of ours, get them to click DPR on eligible listings and explore what their options are. If your MLS is a partner, then use your Down Payment Resource personal marketing tool. Add down payment buttons to your IDX website. These are all available to you if your MLS is a partner of ours. And we're going to talk about options you have if you're in a market where your MLS is not a Down Payment Resource partner. A few more moments until we get to that. Once you're marketing these programs, make sure that you have a relationship with a loan officer or lender who knows these down payment programs, can set expectations, can get your buyers through the pipeline, and whom you trust to handle your new clients. And lenders, now that I just said that to realtors, that's your new positioning. Go out and make sure that the realtors and brokers you want purchase business from understand that you do these down payment programs, you do them well, you have relationships with the program administrators, you can get these buyers through the pre-qualification process and get those realtors, their clients back, ready to go look at homes and contract. And you can also go to the program administrators, realtors, and you can look for the top producers there. And lenders, if you're on the top producer list, I hope you're marketing that fact, because that's an astounding accomplishment. And then lastly, overcoming the down payment hurdle is really all about providing a solution and using tools that nobody else is using. And we like to think Down Payment Resource is one of those tools, but so is the Homebuyer Education course. Go to one. Even if you have to pony up $50 or whatever, go to one, right? Just hear what they're hearing in those courses. Understand the context that's being given and the information that's being given to buyers that are going into that course. The course you are sending new prospects to. Your lender is a resource, realtors. Use your lenders. The program administrator, they are a resource. Go to their training events. Go to their networking events. Read, subscribe to their blog or their newsletter. Read the material they send out. Keep up with their program, and you'll be at the forefront of that, upcoming programs and outgoing news and marketing ideas. And a lot of them have marketing content for you, especially state housing finance agencies. They have marketing content for you. They want you to come to them and get their free marketing material and go out and talk about their programs. Take advantage of that so that you can beat the #1 obstacle that buyers face. And back to Todd, shout out to him, gain a forever referral. If you take a 25-year-old, 28-year-old couple and you help them into their first home and you get them $10,000, $15,000, $20,000 in down payment help, you know their network is coming to you, because that's a service that they didn't know existed and they got from you, and they will forever thank you for, and they're going to send their friends your way, and you can believe they're going to have a lot of first-time home buyer friends coming down the pipeline soon. So a little bit forward thinking, keep that in your perspective. Lastly, keep it simple. You don't have to be an expert, and we've said that a couple times. You don't have to, as a realtor, you don't have to know income limits, purchase price limits, credit requirements, blah, blah, blah. Just become sufficient. Find 2 programs, know where they are available, and know how many dollars you can get, and then let your loan officer partners take it from there and collaborate with you to deal with all the nitty-gritty details. And loan officers, be ready to do that, because there's your purchase business, right? And ultimately, for realtors and lenders, you'll know more than your buyer, and they will thank you and trust you and refer to you for that. All right. Now, how to access down payment resource or down payment information. We're going to go through this real quick and wrap this up for you. Here are our partners. I'll stay here for just a moment. If your MLS or association or financial institution is on this page, then you have some level of access. For MLSs, you basically, in most cases, have down payment resource on agent listing views, client listing views. If the MLS has a public site, it's there. You can put it on your IDX site. You can put it in your personal marketing tool. But for a few exceptions where that is pending, or some of those features are on the way, then it's available to you. All right. We'll talk about if your MLS or association is not on this page, then we'll talk about what you have. Okay. So bear with me for 2 or 3 minutes. Now, here's an example of the down payment button on an agent report or a client report. The $ and check mark in the red square, that's what you can click, that's what your client can click, and you can immediately, with one click, learn what programs are available for that property. And if your buyer's looking at it, they can even account for their household information if they want to, or just see what the property is eligible for. On your own website, put a down payment button on there. The IDX integration is free of charge from us. It's not an upsell if your MLS is already a partner and we've integrated into the listing system. All right, so take that out to your own website. Add down payment buttons on your site. Get those inbound referrals coming to you. Talk to your lender partners and get these people pre-qualified. When they click the down payment button from your site, when you click it from the MLS system, you know the property is eligible. If the consumer is using it, they can see if their household information checks out, what that entails, or what that makes them eligible for. So they can put in household size, home ownership history, are they a first-time homebuyer, household income, are they a veteran, are they a teacher, are they disabled, are they a firefighter, all those things that may produce additional programs. And we'll give them a big number on the screen, and then they can take the next step. Now, if you're doing this on your IDX website, or if you're using the down payment resource personal marketing tool, the next step for the consumer is to connect with you, and then we'll show them the programs. But we want them to connect with you first, realtor or lender, and we want them to start that conversation. So they fill this out, that goes to you, and bam, you're done. Now, down payment connect. If your MLS or your lending institution or your association is not yet a down payment resource partner, we will send you out a link to a brand new product we just rolled out called Down Payment Connect. This is your own down payment search page. It's got your picture or your logo on it. All of the referrals come to you, and it's your own link that you can put in your email signature, on social media, on your website, any digital marketing, and you can start promoting the programs that are available in your market, in your state, and bring those buyers to you and start that conversation with them. So more on Down Payment Connect in our follow-up with the webinar recording, but check it out when we send it to you, all right? And any questions about that, put them in the chat box. Lenders, here's the wrap-up, guys. Lenders, we've been talking largely to realtors here. Help them pre-qualify more buyers. Go to your realtors, go to your brokers, go to your referral partners and say, look, we do these state down payment programs. We do the city and county programs in our market. We're good at them. We've got a top producer in our office. Whatever the case is, whatever your pitch is, whatever value you provide, get that out on the table and make sure they know that you're the go-to person to get these deals done. Grow your purchase volume, lenders. Shore up your referral partners. And Down Payment Connect is a great way for you to do that. So look for information about Down Payment Connect when we send out the recorded version of the webinar tomorrow. Housing finance agencies. I believe we have a few listening in. This is all about program visibility for you. We've never sent you an invoice. We just want you to keep your programs updated in Down Payment Resource. That's why we call you every month. And most of you are great about responding to that. This is also about consumer awareness, making potential buyers and consumers aware of all these opportunities that are out there for them. And because we update every program from every program administrator, that's 2,400 programs from almost 1,300 program providers. We update them monthly for a reason, and it's to make sure that everybody that we bring to look at your programs for you housing finance agencies and program providers, we want to make sure everybody that comes to look at your programs sees current, accurate, trustworthy information so that when they call on you with an application or an applicant, they know the money's there and they know you guys are ready to help them out, and they know that they can get that buyer to closing. It's that simple. And eHome Partners, we're even working on some additional opportunities for you guys. Let us know in the chat box if you're an eHome affiliate as well. All right. Here's just a few examples of buttons you might see on various websites. The $ with the check mark, that's our thing. That's our deal. You might see find down payments, other calls to action. These are all an effort to get consumers to click on, explore, and understand that there are all kinds of opportunities out there for them to explore. If you're the one showing them, you're going to get forever referrals. So questions, put them in the chat box. I'm going to open that up here. And, well, before I do that, I'll tell you what. I'm going to go ahead and say thank you to everybody who joined. We had record registration for this webinar, and we're very proud of that. But more importantly, we're here to support you, and we want to thank you for joining us to learn more about this and let us know what we can do to help you. So thank you for joining. If you're listening into the recording, thank you for checking it out. Let us know if you have questions or need help. info@downpaymentresource.com. Thanks.